We're joined by Mark Decker, Head of Real Estate for Robert Baird. Mark, thanks so much for joining us.
It's a pleasure.
As former head of REIT, tell us a little bit about how the industry's changed over the last decade or so.
Well, it's great to be here with you, Alan. I appreciate the opportunity. The industry's changed quite a bit, actually, and I think most people would look at the early 90s as sort of the beginning of the modern REIT industry. And some of the best REITs, some of the best real estate companies in the country, and today now REITs entered the public markets and have been a great success story. A lot of capital's been raised. It's a bigger industry, more diverse industry, and it continues to attract some of the best owner-operators of real estate companies in the country. And we think the next few years are going to be pretty interesting.
What do you think will be the biggest challenge going forward for the REIT industry?
We're a small part of a much larger market with private real estate, but I think the public markets are now accepted. The REIT vehicle is clearly accepted, and it's been a success story for sure.
Following up on that, you mentioned the differences between the public vehicles versus private investment. Can you explain a little bit about what you think some of the advantages that REITs will have going forward?
I think the main one is liquidity with great corporate governance and transparency. A lot of the issues that we've seen in commercial real estate markets and that we believe we'll still see yet to come are going to involve the lack of one of those three, either a corporate governance structure that is shareholder friendly, if you will, liquidity, or transparency. So I think public markets are certainly not for everybody, but it's a great way to access capital and grow a company.
And do you think that institutional investors are ready to make a move back into REITs after the last sell-off?
I think it's a mixed bag there. I think there's still a lot of institutional ownership. A lot of the offerings that took place earlier this year were, in my view, defensive investments by institutional capital to protect the investments they already had. And I think institutional capital, there's different types of institutional capital. You have the momentum money that comes and goes when the markets kind of are hot. But the people that want to be in real estate, I think the public securities avenue is going to get much larger. I think it's clearly where a lot of institutional capital is going to look.
Do you anticipate a lot more companies that are private right now going public?
I do, yeah. I think we'll see quite a few companies that are relatively healthy, maybe over-levered, not unlike the late 80s, early 90s when there were a lot of really good companies, but they were over-levered and they came to the public markets to recapitalize.
Looking a little bit longer term forward based on your experiences in the industry, do you see any major changes to the business model of REITs going forward?
That's a great question, and it's why REIT exists, to preserve, protect, and defend the REIT vehicle. I don't see any major changes there. It's really, in many ways, not about the REIT vehicle itself. The public markets are what has really attracted the capital.
For more information on this and other REIT news and analysis, check out REIT.com.